Good afternoon, dear traders. Today we will speak about oil because oil is a major trigger today for stock markets, for bond markets everywhere. And of course, it's influenced a lot to inflation level. So, geopolitics is once again taking center stage in the oil market. The latest news flow clearly does not support the idea that the market will quickly remove the geopolitical risk premium from oil prices. The Financial Times reports that Iran is considering the possibility of striking US military facilities outside the Middle East, with potential targets reportedly including locations like Bulgaria and Cyprus if the United States decides to expand its military operations again. Moreover, according to the Financial Times reports, some within Iran increasingly view another round of conflict as a matter of when rather than simply a hypothetical scenario. Negotiations over the Strait of Hormuz have stalled, while Trump has stated that there are currently no negotiations or scheduled contacts with Tehran. At the same time, Washington continues to increase economic pressure on Iran. In other words, we still do not see the one thing that could genuinely change sentiment in the oil market, a clear mechanism for the de-escalation and compromise between the two sides. And it is important to remember that geopolitics is extremely unpredictable, especially when Donald Trump is one of the key players. A single headline, statement, or new threat can be enough for the market to completely reassess its outlook within just a few hours. For now, however, oil continues to move gradually higher. Now, let's turn to the technical picture. WTI is approaching a very important area. Here, 86, 87. What I found particularly interesting here is that so far we are seeing very little evidence of aggressive selling pressure. Not now, and here we can see only active buyers and consolidation. So price has reached resistance, but instead of sharp wave of profit taking, the market has formed a relatively calm consolidation directly below the level. And this type of structure looks more bullish than bearish. So it's a lot of risk of break break down this level. If buyers manage to establish a sustained move above 87, the next logical target would be return above 90. So here is this danger area. However, there is one very important caveat. So, and one very important moment here. At the moment, technical analysis is directly dependent on geopolitical developments. If tomorrow, for example, brings real progress in negotiations, a compromise over the Strait of Hormuz, or at least a convincing signal of de-escalation, so sellers could return almost immediately and move price to 75 or even lower. But for now, the picture looks like this. The conflict remains unresolved. The geopolitical risk premium is still in place. There is little evidence of an aggressive seller around 87, and therefore buying pressure remains intact. But if this market, a single political headline can completely change the technical picture within a matter of hours. So now we can simply watch to this level, and carefully we need to watch consequences of this consolidation. If price will break 84 or 84 and 5, it's a probability that here we can find some geopolitical news and price can move lower. But if buyers will be more active and this consolidation will move into 86 and 5, that's a likelihood to break this level and once again to see oil prices, WTI oil prices higher than 80, higher than 90.